Good morning. This is Graham Bibby on the 12th of June 2015. Welcome to the Insiders Club and this week's Camtasia. I wanted to start off showing you a quick look at the US stock markets, where most of the undervalued superior earnings stocks are that we find, and also then to give you a quick demonstration about how well technicals can work while we use them to back up the fact that we've got around 150 undervalued superior earnings growth stocks in my watch list. And historically, these have proven when the market is stable to seriously outperform the stock market. I want to show you how we use technicals to identify a buy signal and how our stop loss system works. But let's start off with looking at the S&P 500 Standard & Poor's 500 index, because last week last week, not the week just gone, was quite disappointing, and even into this week was very disappointing. And then the last few days, it's great. We've had a bit of a turnaround, and I'm still looking for that follow through, because this is the US stock market. This, where the arrow is pointing right now, is the end of 2014, and we were here recently. So that means the US stock market is in minus for the year. And if you've been in the Insiders Club from the beginning of the year, depending on when you started and the selection of stocks, you're in the region of 12 to 13% up, which you can't really multiply that by what performance of the US stock market, because it was in negative territory, and now we're slightly up. So the stock market is maybe up 1%, and we're up 12 to 13 times. So even in this sideways moving market, you can see how the undervalued superior earning stocks perform. So I just wanted to show you here that the market is recovered from a possible breakdown scenario here. That's the S&P 500. I do go a bit further out and look at the Russell 2000. That was a lot better. Russell 2000 is a smaller mid-cap sort of range of stocks, and that was trading sideways, and we're trying to break out to the upside now. It'd be great if we get above this high, but we are in a bit of an uptrend here, and this level would be support. And then the Nasdaq, where there's a lot of healthy stocks, that had also been breaking down. If you look at this position here, breaking below 5,000, it didn't actually, from memory, let's have a look. It didn't actually close below 5,000, but it tried to zip below it here. But the line on the side here is where the market ended on the day. And if it's a stock, if you've got a line on the side, it's where the stock ended on the day. So, we had this test below 5,000, it held, and now we've moved higher. And again, this 5,100 level is a key level to want to move above. And then lastly, this is for indices, this is the Dow Jones, and this was even 30, the top 30 stocks, big stocks, and this wasn't great because we broke below 1,800 and got down to 17750, which is, maybe the last support level we'd want to reach, but we've regained 1,800, so that's looking more positive. Now, I wanted to show you a stock that I've been showing you for some time, which is Gilead Science, which we have, and I want to show you the consolidation phase that went on here. These two lines, this line here shows you roughly the support level, although we did have a test for a breakdown here. The market held up reasonably well, and then we should look like we may be starting an uptrend, but we had resistance and selling coming in around this level, which is this level, and then we had a bit of a contest going on. So we had buyers coming in at these levels, sellers coming in at faster levels, and then all of a sudden, so that sets us a downward trend angle. And when we broke through this, that's the first sign that we're no longer having sellers coming at quicker and quicker levels. And then when we went here, which is above this level, I'll just zoom this out of it. So when we went to here above this level, that's positive. We came back, and found renewed buying because that moved the stock to a new high. That was positive. And then, as often happens, and I think I mentioned it in one of my previous camtasias, we came back to support the top of what was resistance, because in technical analysis they said often resistance, if it's broken through, can become support in the future. And then quite clearly this level of 100 became a support level. We were already in on the breakout, and we needed to give a bit of patience to see some momentum, and then we moved above this high, and then we started this very nice trend. So the stock has moved from 100 to 119 in roughly 2 months. So that's 19% gain in 2 months, which is great. Then our stop loss positions are not a trading stop loss. They're where the next correction comes in. So the market moved from this low all the way up to here without any real correction. It corrected here, not significant, but that could be deemed as a position to place a stop loss. The stop loss is a point, if we go below that, we're going to stop any loss or stop any further loss or lock in profit. And then the market went on to rise to here, then corrected here. So then at that circle, the stop loss goes from this level to this level. So that means we're locking in the profits from when we bought around this level, and this would be around the 113 level, and now we've moved to 119, and the stop loss is at this level. So I just want to show you how the breakouts work. If I can zoom a bit out, so you see what happens with the market. You get a significant run here, and this is significant because it went from 65 to 110. 65 to 110 is about 55–60% return in 1, 2, 3, 4, 5 months. And then from that peak, if you go all the way here to it went to 115, it corrected to 85. So 85, that is 30 points. That's about a 25% correction. As you can see, the uptrend wasn't over. It's just a lot of people taking profits because the extent of that rise, really. So profit takers start coming in. You start to break down, but the stock still was undervalued with superior earnings. But you still get these phases. And I've mentioned to people in a 12-month period, and even longer term, markets move sideways or down more times and then moving up. So this, if you take this as a period, this is September, October, November, December, January, February, March. So 1, 2, 3, 4, 5, 6, 7, and if you include this month, 8 months of sideways movement, and then we've broken out, and then in 2 months, poof, up 19%. Great chart formation. I just want to show you on Horizon Pharmaceuticals. You've also got here we had a consolidation phase here, with this level being the resistance level. We broke out. So when you go sideways for a period, whether you break out of the sideways movement to the upside or downside, you normally get quite a big move in the direction of that breakout. So it broke out, tested back. So it broke out this level, tested back to find support. So this resistance means we can't get through it, it's resisting us. We broke through it and it tested back. It became the support level where the buyers came in. Before sellers are coming in here, buyers are coming in here. Tells me the psychology of the markets moved, and then we move up, down. Stop loss would be at this level. Then no 8% trailing stop loss, because then we moved from 15 to 22.5, which is a 50% move, and then we corrected back over 10%, but the overall direction is still up. So on that support, which was this support here, stop loss, strong move up, stop loss position here, and then we've broken out to the upside and support is here. So overall, markets drifting sideways. Some of our stocks that are in there starting to perform. The market seems to want to go up. We've got the Greece debacle still going on. I think if we resume, not resume, if we come to some sort of agreement on the Greece situation, even if it's a band-aid kicking it down the road, which seems to be the thing that happens, we will, I think, see a strong move to the upside. I just want to show you one other stock while we're on, because I was hoping to include this chart. You will know from the correspondence I've just sent you that I'm now offering a founding membership joining fee for those who want to join. This a special situation service, and I'm giving anyone who signs up in this next day or two $2,000, because my cheapest service to join is $3,000, or 1% of your portfolio, whichever's higher. And this one, I'm letting people join for $1,000 as founding members. The service is looking for extreme value, extremely undervalued situations, beaten up situations, where I believe the stocks are going to go up 20, 30, 50, 100%, 5 times, 10 times. And believe me, this can happen. This is Uranium Energy Corporation, and the stock was looking great. I've been bull on nuclear energy for some time. It's clean energy, and I know the world's moving that way, despite what everyone says. But after Fukushima, this is what happened to uranium, and in this case, Uranium Energy Corporation. It was virtually up at 7, and it went down to 1. So I'm not sure exactly what that is, but it's about an 85% correction. So if you had 100,000, it went down to 15,000, which is why you don't hold on. And the stop loss level is up here. So your stop loss is here, about 540. So you would have saved a lot of misery, about 80% of the loss you would have avoided. And then I've been watching patiently, and that's many years. And then we had the breakout. Here's the breakout here. Broke out of this downtrend, 180 area being the buy signal. And then this correction, stop loss here was 220. Then the stop loss is 260. And we just been testing that level. And we had a nice pop last night with 285. Now, if you want to be involved in special situations, I have stocks that I'm looking at in the oil and gas industry. I have stocks that I'm looking at in the commodities and mining industry. I've got stocks, markets, including Brazil, Russia, that have been beaten up. Stocks, in some instances, that are down 95%. So if something goes from 100 to 5, even if less bad news happens, they could easily go from 5 to 15 or 20, which is 200, 300%, 400% return. So just email me at ceo@richmondth.com. Say you'd like to be a founding member, and I can send you the details in the application. You will get monthly reports on that one. It's newsletter and research service, and from time to time there will be weekly announcements as things break out, like Uranium Corporation. So this is Graham Bibby. We're 14 minutes into it. Sorry I went on a bit. On the 12th of June 2015, saying have a great weekend coming up, and I hope to welcome some of you, the people that take action and want to look at these superbly undervalued stocks, because this is where you make the most money. This is how the rich get richer, buying after crisis points, after long downtrends. They're patient, and they know the risk-reward ratio is great, because you've already had a big correction, so the downside's limited and the upside is quite significant. So Graham Bibby saying ciao for now from the paradise island of Phuket. Bye-bye.